Hello everyone. Today I'm going to tell you that there is a collapse happening in the market, that you does not even know about it. So enjoy this video. First of all, I want to start with the inflation, right? Like I just want it to be clear for everyone who is watching this video what is the inflation is. From the first economy 101, from the economy from a high school, the college or university, whatever it is, we know that inflation is caused by increasing the money supply, increasing the money circulation in economies. And this is the reason why the prices are increasing, why we can see the increasing of the price of 2 times, 3 times, and so on. So in US, there is a 7% of inflation now. And why I'm taking example of US, because this is the biggest economy, and this economy that have a big impact, influence to the other economies. So as I said, the inflation caused by, injection the money into the economies. And this is what happened during the coronavirus time. Yes, this was a difficult time, but we're talking about the outcomes of the injection of the money. So what we had the 5.2 trillion that was spent to fight with the coronavirus. We're including here the checks that the government was giving for the families and for the whole individuals, and the benefit checks. And we're talking about like 4.5 trillion was as a quantitative easing, like 3 trillion was spending for infrastructure. And for you to understand what is the $13 trillion is, this is the combined of US spend for 13 most expensive wars combined, right? Combined all together. And this number, the number of 5.2 trillion that they spent for the COVID, to fight with the COVID, is 25% of the country's GDP, 25% of the US GDP, right? And this number is bigger than the Second World War II spending. At that time, for the Second World War II, the expense for it was $4.7 trillion, while the war was 5 years, from 41 to 45, but the war started in 39, but anyway, why not about it? So for the Second World War II, the spending was 4.7 trillion, while for the COVID, they spent 5.2 trillion. I'm bringing this number, it's not like 4.7 trillion that they spent at that time. No, this is based on this time calculation. Okay, so this is just the numbers that tells you, how big the US spending is, and what was the reason of this inflation that do we have now, that the US have now with the 7%. And this, you might say this is just the numbers, right? And let me give you this picture as an example, all right? So you can understand what is it. So if you wanna, you can just easily pause the video. But now I want to move to the next one, to the place why I said that there is a collapse happen, right? To the main idea of this video, why there is a collapse happen and you doesn't even understand about it. I'm bringing the report of the Bridgewater Association. And this guy name is Ray Dalio, the head of the Bridgewater Association. And they recently stated that there will be something serious on the market, that this guy was talking about it from the last year, that there is a huge thing going to happen in the market. And this situation that we have now, in general, just, untied their hands by releasing this report when they said that the bubble is burst and you does not even know about it, you just ignore it. As the market faces significant risk, and investors still underestimate how aggressive the Federal Reserve will be during this tightening cycle to fight rising inflation. This is what they published in their forecast for this year, for 2022. They said that the market does not take into account a smooth return to the low inflation of previous decades. You just see the graph without need to aggressive political actions, that accordingly it can even happen naturally on its own, and we're coming to the clash between what's about to happen and what you are ignoring right now. If this sharp market sell-off in January that we had, they say it might not even end up volatility, because we see a big difference between investors' expectation and with the harsh reality that we have. Because there is such a big difference between what is considered to be a chip and what is actually a chip. The probability is worse we see from this increasing potential for large market movements, and this of course implies significant risk from holding assets, as well as significant, even small opportunities for price changes further. They said that there is a problem in the market is currently pricing the first weekly, and think carefully, sit down, take a breath, and just imagine what the Federal Reserve will have to do in the current environment to bring inflation from 7% to lower than 2.5%. And you can ignore it further. Here, such a cruel report turned out the most interesting thing is that the fund is not based on empty place. And they see what is happening, for example, that now there is a strongest upward movement in commodities prices in general in the entire history of observations, respectively. This pushes inflation with this. By the way, will be fought first with the Federal Reserve System and politicians if the tightening will continue. You know, this is a small report from Bridgewater Association, from Dalio, and you know, this guy is a millionaire, this guy is a billionaire. The company runs more than $100 billion fund. This guy's estimated wealth is $20 billion. You know, these people, they made their wealth from not from nowhere. They had the knowledge in economy and so on. So if these guys talking about the bubble, and if these guys are saying that the bubble is already burst, and you still continue to believe that this January sell-off that you had for 1 month, right? Let me give you another picture that I want to talk about it, right? This is how long it took S&P 500 to recover from a financial crisis. The first graph you can see, it starts from 2000s when we had the crisis of, you know, dot-com bubbles, when the bubbles just burst and, you know, there was a collapse in S&P 500, everything was dropping, and it took more than 7 years to recover. So imagine, it took 7 years, 7 long years to recover, 7 years to come to the point that they was before. And then we had another collapse, right? In 2008, the mortgage bubbles that just burst, you know, that dropped S&P 500 for 50%. There was a sell-off of 50%. And it took more than 6 years to recover. And you think that we had this sell-off in January 1 month and we're going to recover it now? If the economic crisis started today, if the economic crisis is going to start in this year, you know, it might take a really long time. We have some keys that, you know, collapse may start. You know, I'm talking about the inflation rate, which is a super high. It is like 30 years high now. We're talking about like so much money injected into the economy. We're talking about the Federal Reserve tightening program that they have to start their sell-off as well, because they already said that they're gonna start selling their balance sheet. So imagine what's gonna happen if this everything combined, and it's just gonna happen this year. You know, this video become a bit pessimistic, but I wanted to be realistic in this life, right? I'm talking about the situation, what do we have now. It's not I bring it from my mind from somewhere that, you know, that may happen and so on. This is a reality that we have. Hope you enjoyed it. Don't forget to smash me the like button. Subscribe for my channel if you are not. I'll see you later. Wish you all the wealth.